Hello friends, welcome to Bankers Platform. So friends, today in this video we will be discussing foreign currency deposits. Okay, so this video will be helpful for the candidates who are preparing for certificate course in foreign exchange exam. So let's start. So topic will be foreign currency deposit. Okay, so foreign currency deposit, what will be available? Let's see. So types of foreign currency deposit. So there are three types of foreign currency deposits are available. The first one is foreign currency FCNR. So FCNR B deposits. Okay. After that, you can see RFC account in foreign currency. And the third one is export earner foreign currency account. So this is also called EEFC. Okay. So EEFC is the full form is export earner foreign currency account. So these are the three types of account that can be opened in foreign currency. So if anybody wants to open account in foreign currency, so these three options are available with the customer or company. Okay, so they can open these type of accounts. So let's see what are the each like FCNR, RFC, and export earner. We'll discuss one by one. So let's start. So first is FCNR definition. So FCNR is there that the definition of FCNR, firstly, you have to understand that is an FCNR deposit, or you can also say that this is foreign currency non-resident bank deposit. Okay, so this is the full form FCNR. FCNR means foreign currency non-resident bank deposit. So it is a term deposit. So this will be a term deposit, and in this term deposit, it is offered by Indian banks. Okay, so Indian banks they can offer. Oh, one second. So Indian banks can offer this to non-resident Indian. तो जितने भी FCNR deposits हैं, that is only for the non-resident Indians. Okay, and person of Indian origin. So these two type of category of people they can open the FCNR deposit. So these deposits allow NRI to hold their foreign currency earnings in India. Okay, so whatever they have earned, जो भी इन्होंने earn किया है foreign currency में, that they can hold in foreign currency in India in a designated foreign currency. Okay, shielding them from exchange rate fluctuation. So whatever the exchange rate fluctuation will be there. Okay, suppose fluctuation are there so many. So if USD rate is increasing, so in that way, if they're having the FCNR deposit, if they're having the FCNR deposit, so their risk is less. Okay. If whether the dollar rate is going up or down, so that will not matter because it's already in foreign currency. Whereas if a person is making the deposit is in INR, okay, and he's a, US citizen and he is now making deposit in INR. So when he will be repatriating the fund, that time he will have the problem of exchange risk. So they are opening the FCNR deposit so that these all risk will be covered. Okay, so shielding them from rate fluctuation and the principal and interest earned are fully repatriable. So जो भी whatever the earnings are there, principal and interest, they can fully repatriate. Repatriate means they can take the fund from India to abroad. Okay, so they can be sent back to the depositor country of residence without any restriction. So there is no restriction. There is no need of paying any tax. Okay, tax is not to be paid. So this is the definition. And if you remember this definition, then definitely you can get here like from this topic, what we are discussing now. So here you can get like five, you can say four to one second. Okay, so in this you can get at least you can get 2 to 3 marks. 2 to 3 marks you can get in the exam if you understand this topic which we are discussing now. Okay, so let's move to the next slide. So here we are discussing the features of FCNR. So what are the features of FCNR that will help you in understanding because questions will be framed from here only. Okay. So first is currency protection. Okay, FCNR deposits are held in foreign currency. So what foreign currency it is available? That is USD, GBP, Euro, etc. Okay, so in this like USD also you can make FCNR deposit. You can make in GBP also. You can make in Euro also. Okay. Next is protection. So what is the protection? Protecting the NRI fund from the adverse exchange rate movement. So अगर वो FCNR open करवा रहे हैं then the exchange risk they are mitigating. Okay, next is tax benefit. Okay, so interest earned on FCNR deposits is exempted from the income tax in India, so there is no tax. Okay, you can remember there is no tax on the deposit. Here one thing you can remember that in NRE, okay, in NRE accounts, okay, NRE accounts and FCNR there is no tax. You always remember there is no tax is in NRE and FCNR. But if it is NRO account, if it is NRO saving account or they are having the fixed deposit, okay, RDP type of deposit, so in that 30% tax will be applicable. Okay, 30% tax. So which type of tax it is? It is a wealth tax. Okay, that is a wealth tax. That is flat. Okay, so this tax will be flat 30%. This you remember because from here, many times they have asked the question that what is the tax applicable on the interest earned in saving account. So whatever interest is earned on this saving account, okay. So whatever the interest earned on the saving account or fixed deposit, so there the automatically banks will apply 30% TDS. Okay, 30% TDS will be there, and that we have to pay in NRO. Other than that, if NRE or FCNR deposit is there, there is no tax. This you remember, and it will help you in your exam. Okay. So tax benefit is there in FCNR. Okay, so it is exempted from tax. So next is repatriation. Already we have discussed that both principal amount and interest, both. Okay, so both are freely repatriable. Means they can send back to their country without any restriction. Tenor and flexibility. So FCNR deposit typically have a minimum tenor of 1 year. Okay. So minimum tenor of 1 year is compulsory in FCNR deposit and maximum 5 years. This is as per RBI. So some banks they may say that maximum 3 years only, and after 3 years renewal will be there. Okay, so interest rate. So interest rate on FCNR deposit are generally higher than those offered on saving account. So FCNR is a type of deposit like fixed deposit we are doing. So rate will be higher only from saving account, and it depends on bank to bank and their policy, their way means whatever they have decided, and as per that only they can give the rate of interest on FCNR deposit. Okay, loan facility. So some bank offer loans to NRI against their deposit, and some banks they don't. But as per RBI guideline, loan against FCNR deposit is permitted. Okay, so nomination facility. So NRIs can nominate a beneficiary to receive the deposit proceed in case of their death. So nomination is allowed for them. Okay, minimum deposit. So minimum deposit amount varies depending on currency and bank. Okay, so here what happens that depends on bank. Some bank will say that minimum 500 USD we will be taking for FCNR. Okay, so that depend on bank to bank. Okay, that depend on bank what they want to have. That is the discretion of the bank. Okay, so these are the features. Let's see next. So this is also features only and deposit permitted currency. So which are the permitted currency where the deposit can be done? That is USD. pound sterling, that is GBP, euro, Japanese yen, Canadian dollar, New Zealand dollar, Australian dollar, Swiss franc, and Singapore dollar. So these are the currency for which the deposits are permitted. Okay. So repatriation, again, repatriation of fund is permitted, and transfer from NRE account permitted. Okay. Transfer from NRE account permitted. Period 1 year to 5 year, and no RD. No RD means no recurring deposit. So recurring deposit cannot be made. Okay. And this point, that transfer from NRE account. This meaning is that suppose somebody is having 10 lakh, they're having 10 lakh rupees in NRE account. Okay. So if they're having 10 lakh rupees in NRE account and they want to make FCNR in USD, so that is also allowed. So whatever the NRE account is having 10 lakh, so in that, what the bank will do, they will apply the TT selling rate. Okay. TT selling rate, and they'll convert the INR to INR to USD. Okay. And once it is convert, so whatever the value is there, so suppose 10 lakh is there, and that is coming around 9,000 USD. Okay. So whatever the USD it is coming, that much amount of FCNR can be created. Okay. So this is the concept of transfer from NRE account to FCNR. Okay, so next is interest payment and premature withdrawal of FCNR. So first, one calendar year is 360 days. Okay, so 360 days means one calendar year. So that you can remember, that is 360 days, one calendar year. And interest paid at interval of 180 days each, or at maturity. That also depending on the bank. Okay. That depend on the bank, how they want to have the rules and regulation for their bank. Okay. Option to receive, option to receive on maturity with compounding effect. So if they want on maturity, all payment they want, that they want in maturity, so that is also allowed. Okay. Next is premature withdrawal, permitted with penalty, but no interest if withdrawn before 1 year. Okay, penalty to cover swap cost. Okay, so this penalty will also cover the swap cost, whatever the cost that is happening. So here, what is that is written, that 1 year. So before 1 year, if anybody is closing, so in that case there will be no interest payment. Okay. So minimum the FCNR deposit should run 1 year. This also question can be asked. This is the RBI guideline. This is not the bank guideline. This is the RBI guideline, that all the FCNR deposit. It is also applicable in that NRE and NRO accounts also. Okay, this also you can remember, that in NRE also it is applicable, NRE and NRO. So whatever the accounts, FCNR, NRE and NRO, that the period of deposit should be minimum 1 year, sorry, 1 year. Okay, if they are closing before 1 year, then no interest will be paid. Okay, no interest will be paid. So this you have to remember. From here also question can be expected. Okay, next is advances against FCNR. So advances against FCNR, that is allowed, okay, in the name of borrower with RBI fixed rate of interest, and for premature withdrawal with advance normal rate of interest. And advances to third party also allowed in rupee or foreign currency terms without any ceiling, subject to usual margin requirement. So if anybody wants to take loan, okay, if anybody wants to take loan against FCNR, so that is allowed, that you can remember, that that is allowed. Okay. But one thing you can remember, whatever the FCNR, like if they are taking loan, so that loan should not go to foreign. Okay. That loan amount should not be going to foreign. that loan has to be credited in NRO account. Okay. If suppose somebody is taking FCNR loan against FCNR deposit, that will be credit to NRO account, not in NRE account. Because if he is putting in NRE account, he may take this fund outside India. Okay. He may take this fund outside India, which is not permitted. Okay. This loan is permitted. Okay. Advance is permitted, but that fund should be used in India only. That fund to be used in India only. It should not be taken outside. And the credit proceeds, okay, whatever the FCNR deposit, that amount will come from the loan, that will credit in NRO account. This you remember, NRO account always. Okay. So if you have any doubt, friends, that regarding this, you can ask your doubt in the comment section. So we will try to answer as soon as possible. Okay, as soon as possible, we'll answer. So, any doubt is there regarding this, that you can ask. Payment of interest for the deceased depositor. So, if claim after maturity, contracted rate. So, if after maturity they are claiming, then contract rate, where is there, that will be paid. Okay. In case of premature, the prevailing rate of interest during payment without penalty. So, here you can remember that if it is a case of death only, okay, and claim settlement. In claim settlement, premature is allowed. Premature is allowed, and whatever the prevailing rate will be there, payment will be done, and there will be no penalty. Okay, no penalty will be there. Okay, so death of depositor after maturity, from maturity to till date at the RFC SB rate. Okay, this you can remember. The death of deposit after maturity. Suppose after maturity, the person is deceased. So after that, suppose for 2 months, if FCNR has run, okay, if it is available for 2 months, so what the bank will do, they will give the RFC saving account rate. Okay. If claimed by the resident, convert into rupee and interest after maturity under domestic rate. Okay. If they're saying that we want to close the FCNR. They want to close the FCNR and they want in INR. So what the bank will do, they will close the FCNR, and whatever the interest is there after maturity, that will be given on domestic rate. So payment to NRI after return to India. So till maturity in foreign currency, and after that conversion into Indian rupee or conversion to RFC account. Premature conversion to RFC without penalty. Payment of interest during intervening holidays allowed. No FCNR, and above 5 year, and no discrimination of interest for same maturity, and no breakage or commission for FCNR deposit. So if any person is returning from India, okay, so for till maturity, whatever the amount is there, whatever the amount till maturity, whatever the amount is there, that will be paid. Okay. And after that, conversion into INR. So then they will convert. Suppose somebody has gone outside for employment. Okay. Employment purpose he has gone. So in that case, when he is returning, so till maturity in foreign currency, and after that conversion to INR. So it will be converted to INR. But if he want in USD or any currency only, then RFC account he can put the amount. Okay. So premature conversion to RFC without penalty. So there will be no penalty in this case, that you can remember. Okay, payment of interest during intervening holiday is also available. And payment to an after return. Okay, no FCNR. After that, they cannot open FCNR once they are returned to India. Okay, and if it is above 5 year, and no discrimination of interest for same maturity period. So if it is 5 year, then the bank will wait till the maturity period. Okay, till the maturity period, bank will wait, and after that they will convert, and there will be no breakage and commission for FCNR deposit. So this is about when they are returning to India. Okay. Next is resident foreign currency account. So this is RFC. Resident foreign currency account is RFC. So first is all NRI. All NRIs can open their return to India as Indian resident and other Indian resident. So if they are returning to India, then they can open this account, that is RFC account. Okay. So it will be saving account or fixed deposit, 6 months to 3 years. Conversion of FCNR to RFC permitted. And now Indian resident can also open RFC account with foreign currency amount, received amount. So Indians can also open RFC account, but in that no interest will be paid. Okay. But if it is opened by a person who was returning from India, NRI, okay, then in that it will be paid. Interest will be paid. Why it is so? Because if every Indian will start putting money in RFC and they will get interest. So more and more people they will start converting their money and put in the RFC account. That is not good for our country. So RBI has made policy like that so that Indian should not get the resident Indian, they should not get the this interest interest on RFC accounts. Okay, they cannot get interest on RFC account. So next is exchange earner foreign currency account. So which is also called EEFC in short. That is EEFC account. Sometimes full form is also asked. Okay, so you should remember. So a person resident in India may open, hold, maintain. Okay, with an authorized dealer in India. So it will be only open with AD branch. It will be open with authorized dealer, AD branch only in any bank in India, and a foreign currency account to be known as EEFC account. All category of foreign exchange earnings are allowed. Okay, to credit up to 100%. They can credit up to their 100% of the foreign currency earning to their EEFC account. And after that, like the account will be maintained only in the form of non-interest bearing. So EEFC account is a type of current account. Okay, it is a type of current account. So there will be no interest will be paid. This you always remember, that no interest is paid on the this EEFC account. And some more features are there that we'll discuss in our next slide. Okay, so the feature is this, that no facility, either fund based or non-fund based, shall be permitted. So in this, no facility will be given in the EFC account. Okay, against the security of balance held in the EFC account by AD. As per present guideline, EFC credit are to be converted into INR before next month end. So this from here question can be asked, that when the currency should be converted. Okay, suppose somebody is getting 10th July. Okay, 10th July, if you're getting the payment, okay, in your EFC account. So end, by the August, by the last day of the last working day of the August, this 10,000, whatever the 10,000 USD a person has received should be converted. It should be converted into INR. Okay, it should be converted. If customer is giving request, then okay. Otherwise, bank will convert at their own end, because bank also have to keep the hedging and all things for them. So it will be not good for them if they keep this for long time. So as per the guideline, it should be converted by the next month end. Okay. So the requirement of foreign currency market can be met only after exhausting the EEFC balance. The requirement of foreign currency from market can be met only after. Okay, so if they are making some payment, so they should always use EFC balance. They should not go to the market and purchase. Means they should not give the payments by INR conversion. Suppose they are having the balance. Okay, they're having some $10 million is available. Okay, $10 million is available in EFC, and they are making their payments from INR to USD like account from their current accounts. So that is also not allowed. So firstly, they should exhaust. They should finish the EEFC account balance, and after that only they should go for INR to USD conversion, or it can be any other currency. So next is EEFC purpose. So amount received by undertaking to RBI for meeting specific obligation by account holder will not be eligible. Okay. Payment in foreign currency by unit in DTA for supply to SEZ out of foreign currency account are to be treated as eligible foreign exchange earning and make credit to EFC. Presently, exporter can extend trade related loans advances to overseas importer out of their EFC balance. Okay, on observing latest RBI guideline. Packing credit advances can be repaid out of EFC balance. Okay. To the ex to the extent of exporter already taken place. Okay. So from EFC balance also they can repay the packing credit. So friends, we are having a course that is was the end of the session. Okay. So this was the last point only related to EFC. So now we are at the end of the session. So here we are having this course on certificate course in foreign exchange, and we are also having a mock test series that you all know. So if you are willing to purchase the course, so you can go for the courses and it will help you. Like first course is this certificate course in foreign exchange and second is mock test series. So these both courses will help you in clearing the exam. Okay. And right now 40 to 50% discount is going on. Okay. 40 to 50% discount is going on. So if you want to take the benefit, you can go for that because this benefit will be available only up to 15th of July. Okay. So up to 15th of July, this benefit will be there. After that, the rates will be hiked. Okay. So rates will be high. So I hope so. If you're interested, you can go for the courses. So thank you, friends. Thanks for watching. Don't forget to like the video if you're benefited from the video. So do hit the like button and you can comment your queries if you're having any query, and you can share this video with your friends who are preparing for this exam, and subscribe to our channel if you have not subscribed. So thank you, friends. Thanks for watching. Have a nice day.